MPC minutes of the unscheduled March 27th RBI policy meet came out yesterday. The language of the MPC minutes was enough to give an eerie feeling. There seemed to be a sense of deep uncertainty among the MPC members on how the COVID-19 scenario is likely to pan out in the Indian economy. Now, India's central bank is deeply aware of its limitations in fighting COVID-19. Yet, it is willing to go far into the uncharted territory to preserve growth and the financial stability. In the words of Batra, Deputy Governor of the RBI, the coronavirus dance macabre, meaning the dance of death, is taking a catastrophic toll on human lives, causing economic disruptions, and in these challenging circumstances, monetary policy has to assume an avant-garde role. This means the MPC will assume high guard, ready to experiment and innovate. In the March 27th policy, the MPC unleashed a bazooka, delivering a significant 75 basis points cut in repo rate, the rate at which banks get short-term money from the RBI. While all the 6 members of the Monetary Policy Committee voted in favor of a rate cut, 2 members voted for a 50 basis points cut, while all the remaining members voted for a 75 basis points. Now, the general mood of the MPC members was pessimistic about economic recovery. The minutes pointed out that there is a rising probability that large parts of the global economy will slip into recession. Perhaps Governor Sakshi Das's comment about the current pandemic-led situation summarized the intent of the RBI. He said it has become imperative to make all-out efforts to protect the domestic economy from the adverse impact of the pandemic. Arresting risks to growth outlook and preserving financial stability should accordingly receive the highest priority. This supports the series of unconventional measures the central bank announced, such as the targeted long-term repos, the TLTRO, along with the rate cut. These are to push banks to buy corporate bonds, making it easier for non-bank lenders and other companies to raise money. The central bank also cut the cash reserve ratio by 100 basis points to 3% with effect from March 28, unlocking the 1.37 lakh crore rupee primary liquidity in the banking system. What was comforting, though, was that RBI Governor Sakshi Das said the macroeconomic fundamentals of the economy continue to be sound, especially in comparison with the conditions that prevailed in the aftermath of the global financial crisis. Batra believes that the lockdowns across states would lead to a sharp widening of the output gap. He also believes that inflation is likely to soften sooner and faster. All this portends to more rate cuts going ahead. While relatively speaking, the RBI hasn't done much compared to the other central banks such as the US Federal Reserve and the Bank of England, which have essentially resorted to print and spend. The MPC minutes hinted at the limitations of the central banks in fighting external shocks, but also emphasized that COVID-19 is a global crisis and warrants action beyond the remit of monetary policy within the country and across the world. There is hope that a quick return to normalcy post the lockdown would have the support of a pragmatic monetary policy.